Paul, let's look at one company that I've been dying to look at, and this is a big request off the Patreon request line. This is Big Lots. Will you pull up Big Lots? Are we ready for this? What do you think?
The one that got away.
Let's do it.
The one that got away, Mo. Why do you say that, Mo? What are you in love with this company?
Well, it's kind of a funny story. So Big Lots, a friend of mine told me about Big Lots a year ago. I looked into it. I liked it a lot. I went to my good friend Gary Mashuris. It was at $11 a share. And I said, Gary, I like the stock. And he goes, yeah, my buy was about 11 or 12 bucks. He's like, but Paul, will it be around in 5 years? I go, He's like, I wouldn't be shocked if it was gone. I didn't buy it.
We were literally sitting in your kitchen at the time. I remember sitting on that Zoom call. And oh well.
Paul, elaborate on the Patreon fees. People are not getting it. They think it's our fault.
Guys, it's not our fault. This is a Patreon issue. They even, in the call last week when I go, guys, I'm going to tell you something I'm sure every creator you have says this. So like, we know, it's bad, it's terrible. We're changing it now, but it's going to take 6 or 7 months before it's live. And I'm like, guys, I'm going to be gone in 6 or 7 months. Guys, we're taking everything off of Patreon because we don't have the flexibility on Patreon. We're still going to let people sign up through Patreon if you really want to, but the price will be more expensive on Patreon. We're going to offer a better deal by going to Everything Money. Everybody who's a current Patreon member, you will be offered a discount to go off of Patreon and join everythingmoney.com. It'll be probably $1, depending, probably be 5% total on what you're going to be offered a discount on because of our fees, and our credit card fees are going to be high, et cetera. So just trust me when I say this. It is Patreon's fault. They own up to it. They admit it. It's a very frustrating thing. It's not us. I cannot stand it. It drives me nuts. I even say to them, how is it possible that a company this big can't charge people on the 1 month anniversary of their charge date?
So stupid.
Yeah.
Joseph just threw $20 at the donation. We appreciate that, Joseph. If you guys want an individual stock or question, it'll be $50, and we'll certainly go through our 8 pillars and give everyone's thoughts on where it's going, including trading. All right, Paul, let's look after Big Lots.
Okay.
Where's this headquarters at?
Columbus, isn't it?
Yeah, yes, it is. Yes, it is. So I worked for a company that did business development, and we've talked to Big Lots.
All right, so Big Lots, $2.4 billion company. I was looking at it, was $400 million. PE of 3.6, profit margin of 10.56. Checks there. Dividend yield, 1.75 with 42 million. Return on assets, very high, 17%. Return on invested capital, not bad, 8.7%. Income. Oh my Lord, look at this jump. So this is a deal, guys, 5.18 to 6.39. I don't know how it jumped up so much, but this is an aberration. I would not bank on this happening forever. It was probably more along the lines of, look at the last 10 years. Very consistently, in the $5 billion range.
So did they get affected by COVID? Not really, Paul.
I guess the positive, did they do a good job doing online sales and cheaper things? I don't know. Because Big Lots is known for their buyouts, right? In the sense of they buy out companies that are going under, they buy big lots of things of, isn't that how they get their stuff? They don't just they're not just like a retailer.
I don't remember.
They buy from companies who are losing.
So prior to last year, with this very slow growth, almost no growth in revenue, I would assume we're going to have a very small multiple in the back end when we get to pillar number 8 in terms of finding our market cap.
Well, so that's the thing. That's part of the whole process here is we have to sit there, especially in the COVID year, guys. It's really, really important to look at longer term numbers because companies were either made a killing in COVID or they got killed in COVID. I don't see many companies that are like, it was the same. You know what I mean? So you really got to pay attention. You can't give a company that killed it too much credit, and you can't give a company that got killed too much credit to that part, like CCL. Do you know what I mean?
Mm-hmm.
Okay, so net income. Look at this net income jump. 165 to 674. That's a huge jump. That's why they're showing such a low PE. Yep. Their PE, it's showing 3.3, but they also almost tripled their profit. So think about that for a second. All right, shares outstanding. 44.36 down to 35.35. Check mark there. They really bought back a lot of shares.
They're doing all the right things here with Big Lots.
So far. Balance sheet.
Current assets over current liabilities, Paul.
1.6 billion versus 1 billion. Check mark there.
Yep.
Cash flow.
Free cash flow, baby.
Ready?
Mm-hmm.
5 million to 580.
What are you doing? What is this man doing? Look,
guys, I've not had a good day today. I've been making mistake after mistake and very frustrated.
Tim, are you seeing? This is shocking. Though.
I've never seen him make.
For a guy, he walks on water like Jesus of the Nazareth. And today,
did you see me go from cash investing to the next slide?
What are you doing? Should I get up there? You want to
I think
switch?
maybe, let's bring Nate up here.
Yeah.
Hey, Nate, come teach the class here. I'll probably screw up the 1, 2, 3, 4 cam over here.
Paul, what I'd like to look at,
Paul's on the struggle bus today.
popular to your beliefs, I'd love to look at the free cash flow growth, which is pillar number
Your
7.
beliefs.
Free cash flow,
This show, by the way, Paul, this is everything
even
money.
made a line
You're on
for it.
everything money.
222 to 264. So this is interesting. Record year of profit, but in a record year of free cash flow, but it wasn't as big a jump as other years, with the average of 101. So 101 times 20 is $2 billion. It's currently at, what's it currently at? 2.4 billion? Yeah. So it's a little rich, especially considering it had a record year here, but they had a $143 million thing there. What else was 73? So this is kind of in between here, Uncle Seth. Mm-hmm. It's an X on 5-year average free cash flow to price. It's an X, but see, whenever you see like inconsistent cash flow like this, I mean, they had 3 bad years in a row right here, right? Mm-hmm. And then they go back to a normal year. But that normal year involved record revenue and record profit. All right, guys, I'm going to use Stock Analyzer tool in dev mode. It's not for production. So for the 18 people who are going to email us between now and the end of the day saying, how do I get stock? It's not available right now. And the reason being, you'll see the data is wrong. It's coming in. We're inputting the data incorrectly. The data is coming in correctly. We're just not computing it right in the back end. That's why it's not available. But the calculator itself still does work. I'm going to go to Big Lots.
But Mo, are people trading Big Lots right now?
This is a tough one because look at this consolidation that it's had. It really can't, since March, it can't break out over that previous high. So right now, technically it's an uptrend, but it's very weak. I mean, you can see that the red line and yellow line are kind of converging on us. So if we can get, I'm assuming, you know what, why don't we just look to give Paul a second to do what he's doing. Let's see what the volume is on this. And it's rather low. Because I was thinking that the reason that trend is so weak is because we have low volume, and we do. And generally, we always have low volume on this stock. So this might not be the best thing to trade, but wait for this stochastic. If it turns down, maybe you can short it. I really don't think there's a lot of room to run. If you want to go long, you got to wait until you break out over all-time highs and just keep running that thing up. But this is a tough one. Probably, unless it's something that you've been in for a long time, I'd probably avoid it. But yeah.
If that sounds like a foreign language to you, Mo and I just did 2 more episodes of the Employed Trader series where we break it down for an idiot like me, an employed dad who coaches baseball and doesn't have a lot of time, shows me the charts because I'm interested in it, got me in some trades, and it's incredible. So that's in the Bid and Ask Nation. And the Employed Trader series is on YouTube, of course, as well. Paul, let's keep going. Someone just asked, and real quick before I get to Paul, Obini asked, yes, I am selling my Little Book stocks next week. I'm planning on doing it live, and I will be buying my new Little Book stocks. Mo will be out of town. They're going to Turks and Caicos.
Yeah, why don't you tell them how you're going to do it?
How am I going to do that? What are we talking about? Tell me. Fill me.
Didn't you say that you were going to host the morning show on Monday?
Yeah. I think I'm going to host that. That's it. That's what I'm getting to, Paul. Yeah. Mo, they're going to look at their new mansion in Turks and Caicos. So they'll be gone. Mo will be gone Thursday, Friday, and Monday. So I think Granddad Seth will be live Monday morning at 9. I'll confirm
I think it's a great idea.
To buy or sell and buy my new Little Books. Not buy quite yet. I have to wait till the first to buy. But anyway, that's what's going on. We'll update all the patrons for sure. Paul, I'm sorry I delayed that so much. You know I love you.
So guys, this is very interesting. I made a couple assumptions here. I did a 7-year analysis. I did a 10% desired return. I did a PE of 10 and a price of free cash flow of 10. And here's why. It's not a terribly growing company. I want a good return on my money, so I want to pay a low multiple. Now, revenue growth. I assumed 1% to 3%. Share buyback, 5% to 7%. Profit margin, 4 to 5%. Free cash flow as percentage of revenue, 2 to 3%. Look at these prices. You see these values, Tim? What's your name, Seth?
My name is Seth, Paul.
I got a low of $52 and a high of $164.
It's currently $69.
Yeah, so it still probably has some upside. Every single price except for one is above the current price.
This doesn't happen often on our show.
No, it doesn't. And this is with a low PE and a low price of free cash flow.
10 PE.
10 PE because it's not a growing company. You know what I mean? I'm not going to buy it because it's a value play. I don't know if it's there yet. I want to do more research. I shouldn't say I'm not going to buy it. The more research is, why was their free cash flow not a huge jump relative to earnings? Go understand why that is. Find out their stores. How are they doing online sales? Like, are they increasing because online sales is the future, right? So this is a company that does offer discounts, and I consider a company like TJ Maxx very, very difficult to do online because they get like, oh, this stock is overstocked, etc. This is understocked. This company has too much. They're going to sell it to TJ Maxx for a discount. It's hard to do that online. So, and TJ Maxx is doing great with their stores, and people like still going to stores. Yes, online's great, but it's nice to go to a store, especially if you have a reason to. Discounts are a reason to go to the stores. You know what I mean?
All right. That is our take on Big Lots. We showed you the long term. We showed you the numbers. We showed you the trading, and we're going to keep going.